Hi, and welcome from thebinaryedge.net. Let's discuss our flagship indicator, the TBE Bands, a little bit about how they work and what they do. So up on the screen there, you can see there's a 1 hour chart for oil, and we've got two bands around it. These are the TBE bands. We've got the red one and the blue one. And so what's going on here is within the indicator, there is a proprietary algorithm built in that parses through all of the available data, all the available back data on whatever instrument and time frame you drop this indicator onto. That's going to go ahead and go back and calculate two different deviations from an average trading range of the product you're looking at. Once this calculation is complete, in the upper left corner, the algorithm is going to display the statistical probability of price exceeding one of these thresholds in any given time period. So for example here, as you can see, the blue line, the probabilities of price exceeding the blue line the probabilities are extremely low. So if you were to, say, be an intraday scalper, this kind of area is what's generally referred to as the low-hanging fruit. So if you're looking to scalp out a trade where the market might be temporarily overbought or oversold, these are the areas you'd look for, because you know that the probability of price going much further against you is very, very, very low. So you instantly put the edge in your favor by taking one of these trades out here, as opposed to some other indicator or a chart pattern or moving or whatever, all of that crap, This is the real hard statistic. This is where the edge is, and so these are great little spots to take trades. Now, another use for this indicator deals with setting your stop. So, a lot of times it's very hard to let winning trades ride, because you're up a lot and then the market comes back a little bit and you start seeing those gains disappear, and you get that gnarly mental game going on, and it's like, oh man, do I take the profit now, or do I let it ride, or where should I put my stop? And the answer to that question is solved by this indicator. You put your stop outside of the blue band, because it's only got a 10% chance of getting hit in this case. And if you look on this chart here, so say you'd gone ahead and bought oil here at this dip right here, and you got that nice upward thrust there. And if that hit your take profit, great. But if not, you would be able to move your stop up along the blue band and catch almost all of that upside before you ended up getting stopped out with a fat profit somewhere over there. Now, let's look at this next dip. Now, imagine you had got long there. Now, if you're just using any old stop or a take profit, maybe you got a little bounce, hit your take profit. Maybe you got stopped out. Maybe the psychological mind game was too much for you and you just cut the trade. But had you ridden that blue band all the way up, you'd still be long this trade. You'd be up big money right now. And by placing your stop down there, there's only a 10% chance you're going to get stopped out of your trade. So what this allows you to do is catch a lot of the meat of a lot of market moves, and it takes the decision-making process away from the trader and puts it somewhere that has a foundation in statistics and science. So not only does it take a psychological load off of the trader's mind, but it's also better, because these are the real statistics. You have only a 10% chance of getting stopped out there. That's where your stop needs to be. And when that band rises, you move your stop right under it, and you're able to catch the entire girth of that big rip right there.